Thursday, February 9th, market analysis, Stan Ehrlich. We have a bearish engulfing like 2 days ago in progress at the moment. If we continue to stay below yesterday's close, we have an official new short sale signal, pretty identical to what happened 2 days ago, and it did not survive the day, meaning late in the day, 2 days ago, there was enough of a rally, and quite a substantial amount of rally, and it closed way above the previous day's close, which is a bullish engulfing as opposed to bearish. Now, that was supposed to be the low for a while, or quite a while, forever almost, for that particular day and beyond. We have now gotten below yesterday's low, which is kind of close to the day before yesterday, the day that we had the bullish engulfing at the end of the day. It wasn't an ER buy signal because it wasn't oversold, but we had a bullish engulfing. We were supposed to come back into a retracement into the range soon. We did yesterday. It didn't close particularly well, but this morning we actually opened at and above yesterday's high. Not a new high since the bullish engulfing 2 days ago, but yesterday's high. It didn't hold. The rest of the day so far, it is currently 10:47 a.m. California time. We only have a little bit past the middle of the day. We have 2 hours and 15 minutes to go before the close. Plenty of time to go down a lot more or rally the only 1.3 that we need in order to get back to unchanged, and then maybe more, of course, to have a bullish engulfing again in 3 days. But that hasn't happened. Right now, we just made new lows on the left side of your screen. 1 minute chart, it's red because of that point. The closing prices became lower than the previous day's close. We start turning the bars red. This is an indication, our indicator, that we have a bearish engulfing starting. We have a strategy that actually goes short at that point. So we are profitable on ER1. Not much. Probably not enough to lock in a profit yet. But we just made new lows. So if I'm bullish because of my overall longer term opinion, head and shoulder bottom and all that good stuff for the year, bullish, we have a problem at the moment. What if this is a good outside down day bearish engulfing ER sell signal? It doesn't tell me how far down it's going to go and how long it's going to last, only that it's supposed to go down right away. Sometimes these signals are extremely profound, like January of 2022 or November for, I think, the Qs, or I forgot which index it was. We got the high and the second highest high for the beginning of the bear market, and we got October 13th, the low. So there were a few buy and sell signals along the way that some worked, some didn't. But we did pick the top of the bull market after COVID and before the bear market of 2022 and the October lows of 2022 and to date. So that was October 13th. What's this one's going to do? It totally depends, in my opinion, on the close. So being down 1.3 at the moment, a little over a point, is not much. Let's try to revisit this at the end of the discussion, but this could drive the market down to 400. In the next few days, it would be actually 399.80-ish, but about 400 in order to test the neckline of the head and shoulder bottom. The big picture is the head and shoulder bottom, starting in, I believe, summer of 2022. October 13th is the bottom, and December 22nd is the lowest low for the last shoulder low. And we already broke out. Everything was fine and dandy. This correction as of a couple of days ago was not unexpected. We got overbought. And this is a little unexpected. So I don't really trust it too much yet. But hey, mechanical trading is mechanical trading. ER1 is already short. ER3 will try to go short in the next 3 days. And it'll be around the middle, not exactly. We have a formula for this, of today's range. So we haven't finished today. We don't know what the exact range is going to be. We may make lower lows. I really doubt we're going to make higher highs, but that's also possible. I've seen more volatility than that. Been around 52 years in this business, so seen pretty much everything. Okay, enough of that. We're going to go and correlate a little bit with the DIA, and we've got boring big pennant formation forming in the DIA since essentially early November. Now, I agree that there's a head and shoulder bottom with an upward slanting neckline. I've been talking about it for weeks, if not a couple of months now, but it ain't breaking out up or down yet. It's been weeks since we had higher highs or lower lows of any consequence. You got to start running down to ruin the pattern, or you've got to start running up in order to make the pattern good and break that blue neckline that keeps going up a little bit above 350 and break out, et cetera, et cetera, et cetera. One or the other, it ain't going to go sideways forever. And there's a pennant forming so far. So until any breakout, it's the last shoulder low. It's creating a pennant formation, which is a little unusual, and there's nothing wrong with it. Quote, QQQ, let's go. And the DIA just made minor new lows recently as well, like the S&P. The Qs, daily chart, are the strongest index we've got, probably because of the perception of interest rates slowing down, which it did. And we are at the higher highs for many months in the last couple of days, getting overbought. So after a gap up also, no surprise it didn't come down, close the gap, which it did. And I talked about that at the time before it happened. And here we are, slightly lower high than yesterday. So you don't have an outside down day, but you are a little bit below yesterday's low. But look at the Qs. They're at a hugely important major historical support level that have shown time and time again at the bottom of it, and when you're below it, resistance to go above it. When finally it went above this range, it came down to it a few days ago and started to work its way higher day before yesterday, Tuesday this week. So now we're back down to yesterday's lows, give or take a little. We're only down 2.4. So it's not down much. There's nothing wrong yet with the longer term pattern stuff. What is wrong is that it's making a minor new low, and I stress the word minor, that I would have expected. I thought the market was going to, and it started to, on the opening, go up and keep going up. Well, here we are. So a lower close than the last 4 days, let's say, would not be good at all for the QQQ. And the same kind of reasoning goes for the spider. We really don't care much about the DIA yet. I'm not going to mention about the 2000 today. So there we go. Futures, we got some new stuff, futures this morning. We have discussion on only those that interest me or have signals that are in progress. We have the top of the market being picked on the heating oil a couple of weeks ago. 4 days ago, we made the lowest low for the trend down, and there was a second sell signal as well. Now we had past tense, a little bounce for a couple of days, alleviating the oversold condition, which is exactly what bear markets get into frequently. So I'm looking for a lower low for the trend. Now this could be extremely important. If we start trading below 2.59 something, we'll have a new low since early October, late September. And the next low for many months prior to that, going all the way back to May, is not much lower. You have a very big support level. I think it's going to get broken, starting at 2.6 down to the lowest low for many months, 2.3.5, let's say. Breaking below that, especially accurate 2.30 level, you're going to end up with new lows for since May 1st. So it's early May. To say the least, profoundly bearish on a long-term basis. Again, this is heating oil. That'd be good news. By the way, I have to point out that not only did we get the high of the rally 3 weeks ago or so, we have a secondary sell signal that worked also. And ER1 and ER3 got short because of the retracement needed for ER3. We sold a high the second day, close to it anyway, period. And it just dropped from there. We got the second highest high, or almost the third highest, for the move period for years on November 8th, with a backup a few days later that didn't work quite right, but signal was there, but that signal didn't work quite right. We got an earlier one that worked pretty good for about 2 or 3 days. Plus, we've got another sell signal that was extremely profound back in June 17th of 22. We picked all three major tops in heating oil for the last 12 months or less. We missed one by 3 days. Give me a break. If we break down below 2.2, that will be, maybe the first time we've picked three highs. And again, this looks like a head and shoulder top formation. Ladies and gentlemen, I present a gigantic head and shoulder top. The last shoulder high was a little earlier than expected. The timing between the first shoulder and the head is often about the same amount of timing, and that would have taken a few weeks more. But the pattern's there, the neckline's there. We even attacked the neckline. That's a little weird in the last few days. Maybe broke it by a hair, but we were oversold at the time, and that would be here. So we bounced out of it. The closing price is what really counts, and it looks like it may have been back up above the hypothetical line. I have to draw that in, not today. Stand by. It'll be in there tomorrow. Next chart. That's a whopper. I don't think I can brag about something else that's that profound. All three tops and a head and shoulder top that could be a bear market for the next couple of years in heating oil. I'm not kidding. Gold. Another bearish sell signal here. That implies gold's going to go down a chunk more. My minimum, I think, is going to be reached now pretty easily at 18 and a half, 1,850. I also think that there's a good possibility that the market might hold around 1,800. There's some good support in there. The next support down is kind of a zone that lasts all the way down to 12 and a quarter, 117.50, I meant 117.27, sorry, 117.25 to 27 lows. After that, you pretty much have not that much support, but there's some. Broad triple bottom formation. It took about a month and a half maybe to develop, but you have so much price action above you for a much longer period of time that probably won't hold up. But again, that's the future maybe. This bear sell signal today, adding on top of the fact that we got the high of the market the day the market topped out, I think is a more accurate way to say it. We're not short at the high. Would love to do that. But we're short when it made a low lower than the previous day's low, and we're short on a retracement rally, if not better, depending upon the opening of that day. Now, very important stuff. Next, soybeans. Our sell signal so far at the top day is holding. We need to start making lower lows real quick. You've got a kind of a resistance level that resembles a little bit of a head and shoulder top. The shoulder high, November 30th. The top of the market is my bearish red ER sell signal. And the last shoulder low occurred a couple of days ago, a week or so ago. It wasn't a higher high. It's kind of close, but it also is at around the same price level as the first shoulder high. So it still qualifies. It's got all the body parts that are kind of tight pushed together. Neckline slightly upward slanted, typical for a head and shoulder top. All we have to do is start to head Tierra del Fuego, head south. Land of Fire, slang for South America, southern tip of South America. So, yeah, next. Platinum. This is the new low and the lowest low since our bearish engulfing at the top of the market way back on January 11th, which I talked about. No doubt. Every time I get a bearish, bullish or green, right here, didn't work, or bearish signals, I talk about them, their expectations, what they should do and should not do. This actually went down within 2 days after the buy, 3 days after the buy signal, and there was a day and a half worth of profitability time. Our trailing protective sell stops after a buy signal trail very fast using 1 minute charts. So there's a high likelihood that this could have been a very small profit in 2 or 3 days. I don't know that for sure, We'd have to look at the 1 minute chart. I'm not going to do that. Next, we have, of course, the lowest low and the lowest low since that sell signal on top of the market. We had a great sell signal there, an excellent one there, an excellent one there, an excellent buy signal there. I don't know how long the top of the market was backward. I can't see that. Let's go check. Holy moly. Many months before, we got a sell signal on top on September 9th of 22. Next chart. Trying to convince you that this is worthwhile even following at a minimum, if not actually doing something about it or learning from it. Bullish engulfing at the bottom of the market, point blank. The last show, the October 13th low, and it was a seasonal low at that. I talked about 2 months before it happened. What to look for, which we got in aces, and why, et cetera, et cetera. Neckline's broken. This is the S&P 500 E-mini. We tested the neckline a couple days ago. We're coming down below yesterday's low, but we never got above yesterday's high, therefore no bearish engulfing. So I don't have a red like the S&P 500 spider, because the hours of trading are different for the E-mini. Sometimes I get E-mini signals or not relative to getting signals or not in the S&P, comparing each other. And of course, frequently I get them in both at the same time. October 13th is the example. Boom, the bottom. Hugely profound, and I said so in the recording that day, exclamation point. So the real test here is the neckline. And for the E-mini, that's going to be 4,087 and change. Next chart. We have a large potential bottom formation developing in corn. It doesn't want to break out above the bear trend line across the top, which has the beginning and the second line to draw the line. We have a third rally that's right up against the line, showing you that the line is legitimate. We have another rally later on in time poking right up against that line, got overbought at the time and pulled back. We have another 2 more in the last couple of weeks. This market's trying to make new lows since the test of the bear trend line, so I wouldn't be surprised if it dropped back a little bit more. But look at the longer term picture here. Our lowest low was way back in July. There's a profound low, which we got a bullish buy signal at the bottom of in December 7th, and no other lower lows since then. So we have an upward slanting trend line across the bottoms. We got a giant pennant. I didn't draw the bottom line in, obviously, just detail the dates for you. And we're not breaking that bull trend line either. So we're getting squeezed to the point of the pennant where it has to break out sooner or later. Keep in touch. Wow, I have not seen a 98.30 RSI reading on any market in years. This is daily data. Orange juice must have had the bejesus freezing off the pants of the orange juice trees with this last cold spell, because it just went screaming from 207 to 267 in 1, 2, 3, 4, 5, 6, 7, 8, 9, about 10 days. 2 weeks. That's amazing. Never chase a market up that's done this. That's suicidal financially, if you ask me. I've been saying that all through this last huge rally. I never like to be a buyer when it turns yellow, because that's what usually happens. Remember, overbought means it's about to turn down. Overbought means it's about to turn down. Overbought means it's about again and again and again. Oversold means it's about to turn up. I'm not finding any oversold. Okay, that one could have been oversold. No, not quite. Look at the RSI. There's oversold. There's oversold. A bottom and a bottom. Doesn't have to last long. Just have to go. Move, move, move. Okay, enough of that. Don't buy orange juice. Go short orange juice somehow, some way, with decent risk, which is extremely difficult to measure because of the extreme strength and volatility. But this thing is about to crash. Probably next week. Next. Maybe tomorrow. This Thursday. We're about to see lower lows. The original buy signal worked very nicely for a few weeks. No problem with that whatsoever. Unfortunately, we didn't get a new sell signal, and here we are all the way back down, very close to the lowest low, my bullish buy signal in months. So breaking below the low of Monday of this week will probably cause the same day a break below December 12th low, and that is probably going to cascade into breaking the low that was made way back on September 28th. And oh my, you're now breaking a long-term bull trend line. You're breaking out of a giant pennant formation on soybean oil, and you probably have a long-term bearish perspective. Next, silver, a little bit of a broadening pattern, not quite. Double top in 2 days, and went from the highest high for months to new lows for over 2 months, or almost, in 2 days. Got oversold, so it went sideways a little bit, but today we've got a lower low and probably a lower close. It's coming down, and it's going to come down some more. Next, interest rate futures. I keep commenting about. They're very important these days to watch because of the market in general. I still think the bond market and the 10-year note markets are making major long-term bottoms. I can't come up with an answer as to what pattern it is, or too much more than just support and resistance areas. Obviously, breaking above 133 and change is going to be very bullish for interest rate futures in general, 30-year bond specifically, but the 10 years will follow. And breaking below 124 is modestly bearish, in my opinion. Look how oversold we got at the very bottom of the market. Unfortunately, I didn't get a bullish engulfing. Too bad. Oh, we did right there, but I wasn't oversold. Oh my, I came so close. Wow. The oversold level on this particular day was 25.43. If it hit 25 or lower, I'd have a red bullish engulfing at the bottom right there on the second low of a double bottom low, November 28th, but it just barely missed. What a bummer. Next chart, same commentary for 10-year notes. Across the board, everything's basically the same, just different numbers. And I think that's where I'm going to leave you today. Yeah, cocoa has a head and shoulder top, but it better start dropping real quick because the shoulder's getting too big. It's going sideways too long. It's kind of close to ruining the pattern. And I'll comment about crude oil because we did catch a great sell signal that went all the way from overbought within a few days to oversold conditions in just a week, and now is bouncing a little bit. I need to see new lows for the last month or two in order to get gigantically bearish and continue to be long-term bearish on crude, and I'll let you go. Thanks very much. Profitable trading.